Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex markets from the ForexPeaceArmy.com. As usual, we will talk about the euro currency and proceed with the discussion of the daily time frame. Well, yesterday we said that probably market could show some retracement to the upside, and then that we could use to enter on the short side of the market, since in general market has turned to the bearish environment in the short term. And that really has happened. Our previous trading plan has been achieved almost pips to pips, and the market has shown this retracement by the intraday pattern that we have discussed yesterday. That was the bread and butter trade on the hourly time frame. We'll take a look at it a bit later. But what we have here, first of all, and the most significant event on the daily time frame, is that the trend has turned on the bearish side. You can see that MACD indicator now is showing the shifting trend to the bearish, and that shifting was confirmed by that close, by that candle. Okay, now you can see that market also stands in some retracement and trades below the weekly pivot point. So another thought that I would like to share with you is that market could show the head and shoulders pattern with the 127 ratio. So the head stands at 127 extension of that shoulder. So market should hit some area around the first fib support area 130.58. It's right here. This is the 3/8 support from that low to that high. So market could reach it, then start to show the right shoulder. So that in fact could happen, because this will be look logical, so that market will show the deep retracement and continue move to the downside. That is now a target according to the weekly patterns, around 129 area. It's right here. So what we could do during today's trading session, let's take a look at the 4-hour time frame. We can see that 4-hour time frame trend is bearish by MACD. This is the red line, is the MACD indicator, MACD predictor indicator. It shows the trend. When the price action stands below the red line, trend is bearish. When it stands above it, trend is bullish. So you can see that market now is approaching to the break-even point for the trend by the MACD indicator. So that is an excellent possibility to get there. Such pattern is called stop grabber, that we have discussed a million of times in our researches. Also take a look how market is moving. That was our retracement yesterday. It's right here. We said that market has hit ABCD pattern target. It's around 139.35, and after that it could show some retracement. That has happened. Market has shown retracement that we have to use to enter on the short side of the market. So that's also market proceed. Take a look. 100% from that ABCD pattern retracement. 127, 130.95, I suppose, somewhere like here. Retracement. The 1618 target from that ABCD pattern stands precisely in agreement with the daily 130.58 area of support. So that the ultimate target for that ABCD pattern is 1618 extension, and that is quite logical from the standpoint of that head and shoulders. So market, if it will reach that area and hit this 1618 extension target from that ABCD pattern, this will be nice reason for the deeper retracement, since after the hitting of 1618, it's normal price actions that market shows deep retracement. This stands in agreement or in a row with this potential head and shoulders. So market will hit some kind of the necklines right here, okay, and could show some deep retracement. So that's what particularly I will be watching for. So market, I suppose that market should proceed lower, and the nearest target of this potential move to the downside is right here, 130.50, 130.58. It's the area to watch for the potential target of this pattern. Okay, the major question now is where market will turn to the downside, from that level or it will proceed a bit higher. So if we'll take a look at that level, that's really a significant area of resistance, because this is 4-hour confluence resistance, because this is the consolidation of the 618 resistance from the 131.65. This is from that high to that low, 618 resistance, and 38 resistance from that high to that low. So they stand relatively tight range, 131.74, 131.65. This is confluence resistance. Also, take a look that this is the weekly pivot point. Now market stands below it, and this is the previous swing low. So that is also some kind of the classical support resistance issue. Well, on the 4-hour time frame, the major attention should be focused on the potential stop grabber pattern. If market will try to shift trend to the bullish but then fail and close below this red line, or if you will take a look at the simple MACD, market should try to shift trend on the bullish side but later will not confirm by the close price the shifting of the MACD to the bullish side and trend will hold bearish, this will be the stop grabber. If it will give us the solid confidence that market will continue move to the downside during our nearest target during today's trading session, right from that area. If we will take a look at the hourly time frame, you'll see that here is some unwelcome issue for the bears. MACD shows the bullish trend on the hourly time frame. Take a look at this pattern: A, B, C bottom. Market hit 100% extension. So we could say that this is also an agreement, confluence resistance and agreement. This is really solid area of resistance. But take a look that this swing to the upside, the CD leg, was really fast. So market accelerates right to the 100% extension of that ABCD pattern, and in such circumstances, very often market proceeds higher. So I can't exclude that market could proceed to the next area of resistance and next agreement area of 132.05, 132.07, and right from that area we'll start move to the downside. We can't exclude that. So how we can act in such environment? I see two different ways how we could trade this situation. The first way is the aggressive one. So we could try to enter short from that area with some small lot, or at least the half normal position that you trade, and place stop above the next area of agreement, above this 132.05, 132.07 area. If market will proceed higher, then we could add more from that level. I suppose that nice area to place stop somewhere above that 618 resistance of the major 132.31 that we have discussed yesterday also. Well, if market will proceed higher, then we could add more from that level, and by this section complete our short position and wait for the continuation of move to our targets 130.50 area. It's right here. Okay. If we'll see that market will form the stop grabber at the 4-hour time frame, we could try to enter with the larger lot from that level, and if market will suddenly proceed higher, then add more, because this, if market will form the stop grabber pattern in that area, this will give us the solid confidence that market will take out that loss, because this will be the target of this pattern, and if it will happen, it's obviously market will proceed to hit that target in 1618 extension. That is an aggressive way. The conservative tactics is to wait when the market will reverse from the level, whatever it will be, either from that level or from that level, and wait when the when the hourly time frame trend by the MACD indicator will shift on the bearish side. For instance, if market will proceed higher, then reverse down, hourly trend will shift to the bearish side, and you could use this recent swing to the downside, by which trend will shift on the bearish side, nearest retracement from this recent swing to enter into the short side of the market. It's very difficult to compare these two possible tactics, because it's very difficult to predict where you will enter when the market will shift trend to the bearish. Well, the advantage of this conservative tactics, so if market will proceed high and accelerate to the upside, you just will not enter on the short side of the market, because in this case the hourly trend will not shift on the bearish side. The advantage of that level, that area, so you will get the better entry point if market, for instance, will reverse right from that area, accelerate further to the downside, because by the conservative tactics you will enter somewhere around that area, around 131, so it will be a bit worse entry point. But this entry will be safer, because both trends, as daily trend as hourly trend, will be on the same side. So that is choice is up to you how you will trade this current situation, but personally I like more the aggressive way to trade it, since we have the bearish trend on the daily time frame, and now we could treat this price action only as the retracement in the starting bear move to the downside. Also take a look at our trading plan yesterday. So we said that market probably will hit this target 131.35 before we'll start any retracement. So that has happened. That was retracement to the level that we have points around 132.20 area, and then market accelerates further. That was really nice bread and butter sell by the Jod Napoli directional pattern. So that has happened. So that's all for today. Keep on the particular levels that we have discussed. Wait for the clear patterns and choose the way how you will trade the current situation from your personal view, from your point of view of your trading plan, and control your risk.